You're listening to REIA CAST, a podcast of the Southwest Florida Real Estate Investment Association. REIA CAST brings together a variety of real estate entrepreneurs from all over the world to share tips and ideas. The core purpose of the Southwest Florida REIA is to help members become more profitable and successful through networking, education, and empowerment. Here are your hosts, Jeff Tamarello and Michael Lyons.
Tamburello. I'm one of the directors of the Southwest Florida REIA. I'm with the other director of the Southwest Florida REIA, the esteemed Michael Lyons, MBA.
Hey.
Michael Lyons. We're about to talk with our speaker from the luncheon, Christian Foss, which that was a great presentation at the luncheon. I enjoyed it. I know a lot about sub-twos. I've kind of done, we were doing them way back in the day before. Now there's a guru that's made them popular again. But I honestly think that part of this is it's just a part of the market. When you hit a point, the subject to basically got really popular in 04 and 05.
Yep.
So, and I'm not saying it's 05, but it's
no. And then a lot of the fear too was what stopped it being popular was they thought the banks were going to really crack down. I mean, of course, the market totally changed too. But
the market declined to the point it didn't make any sense.
Numbers didn't make sense. Yeah.
You know, I mean, it made no sense to. Why am I gonna? I have a young Thundercat wholesaler who keeps bringing me deals, and I really want to help him. But like he brought me one that was a subject to, and it was no equity, negative cash flow. I was like, I thought we were friends, man. Like, what have I done? Like, hey, Jeff, will you buy this bill from me that you can't sell?
I guess a lot of times too, I think people get caught up in the emotion of doing a deal, so they don't analyze it enough. Because one of the bad things too, I found, talking about wholesalers for a minute, I've had some great purchases through wholesalers, fantastic purchases. But the ones that will send you deals that they think are deals that aren't deals, after a few, I'm like, I don't even pay, which is probably my fault on that. But I stop paying attention when I know that everything they send me isn't going to be a good deal. So it's important to run your numbers and know the market because you send a deal, hey, this is worth 150,000 and I'm going to get it to you for 100 and then you find out it's worth 145,000 and it needs work. Like just one of those situations, but it happens. So yeah, he should be your friend and send you good deals, man. That's messed up. So,
well, in a way, it's kind of that human nature. Everybody wants to drive through and figure out and make it work. And sometimes you just need to look at this deal and go, this stinks.
Yeah.
And just stop.
Well, that and even letting the person know, hey, this is bad. Let's do the numbers a little more and, educate a little bit on this is what I'm looking for, so.
I'm trying not to have to live in your mom's basement. And if I buy like this, I'm going to be asking your mom to let me live in her basement up north.
Yeah, because that's it's going to be awkward for everybody.
Yeah.
So, yeah, that's
coffee.
That's right. Well, what are your thoughts on the market now? Like, we are currently April 2025. What's going on?
Let me share the old handy dandy spreadsheet here. Can you see this?
There it is. Yep.
So this is March year over year. Dumped it all in. This is the spreadsheet I use. More and more, I glance at the months. I drill into the quarters because it just makes more sense.
Yep.
Next week, we're going to do the foreclosure report. I've got the data done. I think it was like 52. From the previous month was like in the 40s. So foreclosures aren't an issue yet. There's all the talk that there's all these moratoriums that are coming, and maybe not because. Foreclosures are truly what drives a market down. What drives a market up is loose liquidity from bankers. And what drives a market down is when the same bankers clean off their balance sheets with the excesses of the loose liquidity.
Sure.
So we'll see. But when I look at the volume, 9%, just under 10% in volume, sales counts are down. What's interesting is the sales counts are down less than the volume because pricing is going down. Yeah. The average price is down almost 3%. Look at the median. Year over year, down 7%.
Wow.
At a slightly higher home, too. That's an average square foot of the whole market. But people are basically getting a cheaper house that's bigger than what they could have bought last year.
Yep.
So,
In
Go
some
ahead.
cases, because isn't brand new pushing a lot of these numbers or no?
Yeah, I can click on that too. It's a tab in there. But the what's really got me interested is the cash sale still 42%, man. You
Wow,
know, for everybody
that's
that tells
good.
me the sky is falling and the world's coming to an end, 42% of the people wrote a check. It's hard to get a negative feedback loop with very little foreclosures and 40% of the sales being cash. This is kind of more of a slow bleed, which really reflects the birth rate chart. You know, our incoming batch of retirees is just not what it once was. And so particularly like one thing you look at when you take manufactured homes, they are 29% less sales counts than they were last year. You look at the birth rate chart, it's about 15, 16 less retirees. 62 is that age to watch. But
Yep.
when I'm looking at pricing, I mean,
Well,
down.
take a second if you can, though, because we talk about this a lot. And if someone's new or listening to this, when Jeff's referring to the birth rate chart, you go back 62 years, and that's who's retiring today.
Oh, but
Generally,
that's a blended. You get early retirees, and I mean, we just sold a retiree home to a guy who's 50.
yeah. I mean, like on average, that's the
Yeah,
number they
it's
follow. But
basically 50 to 72, but blends out pretty well at 62. And if you take the live burst from the census and chart it against our sales counts, it's probably the closest thing you're going to find.
yeah,
So you're looking at particularly retiree areas with manufactured homes and condos are pretty big, but condos also have the wonderful problem of all these milestone inspections and assessments. And I mean, there are some great condo complexes. Like I was part of a flip in Port Royale, which is downtown, kind of the original OG high-rise condo with the pool has the most amazing sunset there. And I want to say the fees there are just about 1,500 a month now, and they used to be about four back in the day. So
$400 to
yeah,
1,500.
like North Star Yacht Club, I think it's just under 2,000. So there's some fees out there, if that makes any sense. But
Yeah, yeah.
well, when
Which
you
I think the combination of those fees and these new condo laws, that are coming out, that is what's really going to hurt going forward, and even now condos. I mean,
yeah,
big time, big
well
time.
that and I mean I laugh too because bank REOs are up 60% REO sales in March. It was five last year and there's eight this year. It's an infinite number. There were zero short sales in March of last year, and there was three. So we're just going to call that 300% increase.
300% increase.
So we're
3,000.
going to lead with that as our headline.
Yeah,
300% jump in short sales.
we should do that. We should do
And,
a video on that.
and to
Yeah.
the three agents that close those, we're going to send them a bottle of something because short
Yeah.
sales it's like you had never given birth, so you know what I mean. But it'd be like you had a 24-hour live birth to an accountant. So no drugs, no nothing.
Yeah, that's
So,
pretty good.
short sales are terrible. Hopefully they've gotten better because we're going to be doing some the 22, 23 like FHA, VA loans don't
Yeah,
really have the equity to trade out at this point.
agreed. No, there will be some, and good luck to whatever agent or individual who takes that on.
Another really interesting number when you look at the dollars per square foot, it was 226 last year, it's 208 this year.
Well,
You're talking about the year built bubbles.
whoa.
I think I would have been prepared for this. You got the blue line is 2025. The red line is the 2024 from last year, the new homes. So you just don't have as many new homes. Permits are slowing down.
Yeah.
And then the next biggest batch of homes is the 5 and 6, the crazy years. And there's less of them trading too, or than, last year slightly. But if you go back, it's just kind of all down the board. It's just all across the market, slightly down.
Yeah.
So, I mean, I got another part of the spreadsheet I do, like Bonita Springs, we're 11 months inventory, Cape 9, Fort Myers Beach, just 28. Might be a
28 months, that's all?
market at this point, even
Oh,
though the
yeah.
sellers are holding on because there may be amazing days coming for Fort Myers Beach, but there's definitely a lot of property for sale. Lehigh,
2033. That's the year.
Yeah, could be, or maybe next year for all we know.
With real estate, you never know. Yeah.
Yeah, Lehigh Acres 7, which is the lowest. People tend to, they just don't understand Lehigh really for the most part. I mean, some of the best yields are Lehigh Acres for buy and hold properties. And 7 months is starting to flirt with a buyer's market, but not quite as bad.
Yep.
But all in all, March, not terrible. I mean, it's could be worse. The rate of change is getting better. December, January was pretty good. February was nasty statistically, but the weather was so bad, people couldn't come here. You
Yeah.
know, a lot of people couldn't come here, and if they can't come here or they're late getting here, they're just less engaged to buy a house because the first couple of weeks when you get to Southwest Florida as a potential snowbird, you know, you're going to Lobster Lady, you're going to here, your friends take you out on the boat, you know what I mean? You go here, Deb and the Dynamics. My wife's got an uncle that's a band that plays here. And I think Uncle Ed one year hit him 30 days in a row. So
Wow.
yeah, I was like, man, Uncle Ed, I don't think I could see Metallica 30 days in a row.
That's a lot, man. Yeah. Whoa.
Well, for him, it's the crowd. He knows everybody there. He has a good time. You know what I mean? But
Sure.
yeah. So, you know, they go see the bands, they go on the water, they go out to eat, they do all the cool stuff. And then, hey, this is great, you know, and then they start looking for, you know, getting their own place. But yeah, we're definitely not in the end of the world. We're still, we're in a down market. We are correcting. I mean, I said that in an interview recently with Gulf Coast News. It's time to stop. You know, a lot of people will dance around the actual subject of it, of we're in a declining market right now.
Yeah, 100%. Well, let me ask you this. Maybe this is a dumb question, but because it doesn't, it matters, but it doesn't matter. The peak, what would you say the peak was post-COVID or post?
May of 2022 had the highest average price.
So from May of 2022 until right now, how down are we, roughly?
We're
Percentage.
going to look at a spreadsheet, okay? So don't actually, you know what? Give me 1 second and I can have us just look at a chart versus, because this spreadsheet is the machinations of a crazy person.
Well, I mentioned that. I mean, you're looking at what? So May 22, you're looking at 2.5 years of peak into where we're at, more out of the curiosity of how much percentage-wise are we down? Because I know it's going to.
Let me show you something cool. This is
Okay.
my favorite chart that I do.
And depending on the market segment, you're talking single-family homes, condos, mobile home, duplexes. I mean, that's all going to fluctuate to a certain extent, you know.
Yeah, that's why I try and get as many lab rats in every equation. That's why I look at the county a lot. Can you see this?
Yep, sure can.
All right. This is an interesting chart. This shows the green line, or sorry, the blue line is pricing.
Okay.
The black line is sales counts. And that's kind of the dance of the two.
Okay.
You can look at, like, this was a normal growing healthy market from basically 13 all the way through till the pandemic kicked in.
COVID,
and
yeah.
the sales counts jumped way up, which then at some point drove the pricing up. Sales counts are now coming down and it's driving the pricing down. You can look at it happened here. You had when they hit right there, just like right there, that's divergence. Same thing here, divergence. This was divergence to the downside. This was divergence to the upside.
Yep.
So what I'm really waiting for is when these bump again.
Yeah.
Will they, won't they? I don't know. But sales counts first have to turn up year over year for it to happen. But this kind of shows you the chart. And I mean, this was just a normal, healthy, growing market. And then the pandemic kicked in. So there's a lot of people that are claiming you have to give back most of the pandemic pricing gains. They may or may not be right. I don't know.
Well, but would you say, so from the peak of May 2022 to April 2025, are we down as a market 15%, 12%?
I don't think it's that much, dude. But if you give me 1 second, I can come up with that information.
Yeah, I'm more curious is just to see. I mean, a lot of people end up, the curiosity of how far down we are. I think just being realistic with the market is one of the problems that a lot of people have. They get too emotion-based or whatever agenda they have is more important than what reality is. And I think looking at numbers is what most people miss out on when it comes to checking the market. Everyone has their opinion and hopes for what's going to happen. And from an investment standpoint or from an investor standpoint, I would love to see it go down about, I don't know.
Like
70%.
most of the people that come to our meetings are, we're deploying our own capital. this money didn't come easy.
No.
And I'm trying not to lose it because, I'm trying not to make my mother-in-law right because, that guy's an idiot. Why do you want to marry him? But
Yeah.
yeah,
Told you this whole time. Yeah.
when I take March average price versus the average price May of 2022, we are down now 11%, which is a correction. When you
Right.
break 10%, it's a correction. It's really a stock metric, but 10 to 20 is the correction phase. When it goes above 20, they start calling it a crash.
Gotcha. Okay.
So we're technically down 11% from the peak right now. So
that's not horrible.
no, I mean, you look at the real math, it's just like today, as we're taping this today, it's the second day of the tariff stock market crash. I've been buying stock. Oil's getting cheaper. I'm not really seeing the problem in this. If you're exposed to the stocks, yeah, it's terrible.
Yeah.
But, it is what it is. And there's no such thing as a dollar being lost. It's just a dollar changing hands. It goes from one person to the next.
So true.
You didn't lose a dollar. You just allowed somebody else to get your dollar.
100%. No, that's so true. Again, there's a lot of emotion involved in that kind of stuff. But when it comes to the market itself for real estate in Southwest Florida, I say this all the time. The fact that in January and February, we're in shorts and occasionally, or more often than we should be, on a boat while up north they're in snow, it's not going to change. Meaning we're going to enjoy that forever. The amount of people that want to come here to retire and see the beaches and all that Florida has to offer, it's not going to change. So will we see a potential drop still and somewhat because of the inventory we have? Probably a couple percent, maybe, maybe let's say even 5%, worst case scenario.
Maybe more. Maybe there really is a bunch of loans in moratorium, but like that's been making the rounds, all these FHA loans. But I actually dumped out of the MLS kind of the problematic period, that doesn't have any equity. It was like 6,800 FHA loans, so it'll probably be 9,000 with new build, maybe 12 is high.
Yeah.
But 13% was this default rate that was supposedly making its rounds on Twitter, which is generally never right. You're getting your science from philosophers there for the most part. They're just trying to get clicks to get a check from Elon. But even if that's the case, spread out over a couple years, foreclosures in the tune of an extra 100 to 300 a month compared to what we lived through.
It's nothing.
Yeah.
It's nothing.
I mean, wake me up when it hits 1,000.
Yeah. Well, the funny thing too is when another part of that is you said the sales counts that are the properties that are being purchased with cash, not financing, 42%. That's huge. I mean, that's a huge number still. That's a very high number. So now if that number went down to 11% on cash,
it was
deals,
5 in 05.
5 is, yeah, even that. I mean, like we're at 42% cash, transactions or the transactions, no financing involved. They're cash. That's pretty incredible. So yeah, I think we've got maybe a little bit of a rocky year is probably the best way to describe it. And we get beyond some of the added inventory or the extra inventory we have, because if the permits for new construction are down, like you mentioned, and 11% drop in value is not tons, we'll get rid of some of this inventory. I think 2026 will be just fine. I think this end of this year will end on a good note. It'll just be rocky getting to it with a lot of uncertainty. But I don't know. I see positive things ahead. I don't see negative things.
Well, I keep saying why the '08 crash probably won't happen again is because we're actually all ready for it.
Yeah. Yeah, that's exactly right.
We all lived through it. Most of us are still here today, prospered through it.
Yeah.
And I know what I did wrong and I know what I did right. And I would love
have the cash
to shot at it again.
Yeah. Well, the funny thing is we have the cash and then it won't happen. So it's like, there goes that, man. Yeah. So
let's, I guess we're going to talk with a Christian who was at our luncheon next. So let's grab him on and then we'll interview him.
Sounds good. Let's do it.
Hi, I am Jeff Tamburello, one of the directors of the Southwest Florida REIA, joined by the other director of Southwest Florida REIA, Michael Lyons, and we are joined by Christian Foss. We all know Christian well. He's a member of the REIA, investor, was an attorney, one of the few attorneys that you actually want to talk to. And he just spoke recently at and that's not, we love attorneys, but he just spoke at our luncheon about subject to deals. And we thought it'd be fun to have a conversation here about it. So, how you doing today, Christian?
Awesome. Thanks for having me, Jeff and Mike. Good to get to
Absolutely.
be on board. And I'm just going to caveat, I'm a reformed attorney because I'm not practicing anymore.
That's good. No, that's great. No, hey, we're happy to have you. Great presentation the other day.
Thanks.
A lot of good information. So tell us about subject twos, what you're doing and why, and
Yeah,
all the goods.
absolutely. Yeah, it's falls under the category of creative financing, right? A lot of people are familiar with seller financing, and the subject to is really a way to buy property without using your own credit. So the big picture of it is you have a seller, generally they're, don't have a lot of equity in the house, usually behind on the payments, maybe pre-foreclosure, health issues and so forth, or they need to move quickly, they need to relocate. So the opportunity for the seller is to sell their house quickly as is, usually get a higher price than trying to sell it on market using a realtor. But the benefit for me as a buyer using the subject to is I'm not having to use my own credit because I'm basically taking over the mortgage payments for the seller.
Sure.
So that's one opportunity for me. The second thing is it's usually a low out of pocket or no out of pocket cost depending on how the deal is structured. The other benefit is that I can close quickly on it, because we're not going through appraisals and contingencies and usually long
Financing
inspections and so forth. So we can close really quickly on it. So those are some of the benefits. And usually too, you're getting a house that is still generally in good condition, right? Because they're living there. It's not usually a tenant occupied. It's usually owner occupied. And really what I'm looking for in that is really good rates. That's what I'm looking for. I'm looking for rates below, we're sitting in the 7% or whatnot. I'm looking for those loans that were originated in 21, 22 at 3, 4, 5% with a low PITI. And that's where the benefit is for me as a buyer. The caveat on that is all loans, since I am not applying using my credit to qualify for this loan, the loan is staying in place. There is a due on sale clause. All mortgages have a due on sale clause because the property is technically being sold to me. It depends on how I'm taking ownership of it. One way is the seller grants it into a trust. So I'm buying it in a land trust, you could call it, or I can take ownership in an LLC. So technically it's changing ownership. The downside or the negative potential for the seller is I could stop making payments, right? Then the property goes into foreclosure. It ruins their credit further. They're having to maybe take legal action. So those are the pros and the cons for both the buyer and seller.
On that note, first, while you're on that topic, specifically to one, you've got to gain their confidence for them to be willing to do it. I get that.
100%. Yep.
Do you then share with them that, hey, here's making the payments each month? Is there do you give them, hey, here's a receipt of the payment each month? I mean, and maybe you don't. Do you do anything to update the current owner or the person you got it from? Hey, I'm making
every deal has been a little bit different. I've had some sellers where I've actually kept in touch with them, let them know update of what's going on. Other people have moved out of the state, and they do get notice. As far as I keep them on as a notification, either a text message or an email, so they can get copies of confirmation of statements and so forth and see what's going on. But as far as the main point of contact, if there are any notifications, I change that to my email or one of my phone numbers, and the mailing address changes to either a PO box I use or a trustee's business address.
Gotcha. Okay.
Yeah.
That makes sense. That's good. And I mean, to cut you off, I'm just curious how that worked. Again, once you kind of gain their confidence and the document's signed and it's now yours, they almost have to trust you. But
and Mike, that's a good point. I mean, I think the biggest obstacle, A is a lot of people don't know about this creative financing method. B, it is pretty technical, so a lot of people don't understand it. Even real estate professionals such as realtors, because some of the properties that I purchased using the subject to method, the realtors had to be educated about it too, and I had to walk them through the process. And then I think the trust factor is just giving them my background. I've been in real estate, 25 plus years. Background is as a real estate attorney. I have testimonials, in YouTube of other people that we've worked with. And also too, if I'm giving the seller money to walk at closing, which there are, deals we've closed on where the seller is walking with money. It depends on the equity. And then the second thing is if I'm keeping it as a rental property, I'm usually putting some money into the property, even if it's just lipstick, touch up paint, some new fixtures and so forth. So they know that I have a vested interest because I'm investing my capital into the house and I'm not as likely to walk away from that money and let the property go into foreclosure.
And at closing, they see that if they're in debt, or they're in default, they get caught up. So I mean, that in itself's got to have a huge confidence builder for them, I would think. So
exactly. A lot of the instances, like I said, the seller's usually in arrears, with the mortgage company. Sometimes they're in arrears with their escrow balance as well, for taxes and insurance. And yeah, we do that at closing. So they see that I'm, wiring money to the lender, Wells Fargo, or whoever that may be, bringing their mortgage current.
Gotcha. That makes sense. That makes sense.
For sure. And also too, sometimes where the seller has a little bit more equity than I'm willing to pay him out at closing, I've done where the seller will then do a second mortgage and will basically defer their equity and I'll pay them over time or maybe give them a lump sum payment 2, 3, 5 years down the road for their equity.
Gotcha. No, that makes sense.
What's the average avatar of the seller you're encountering that's open to this? Kind of who is this person?
Yeah. It's lately it's been a lot of sellers who purchased their property during COVID, 21, 22. They bought at the higher of the market. They maybe have buyer's remorse. They maybe relocated to Florida and it's not their cup of tea. So I'm seeing a lot of that where they're not distressed, but they want to sell their property. They want to get back to where they came from, or they want to relocate for a job, but they don't want to bring money to closing, right? Because even if their house is worth what they owe on it, they're still going to have to come to the table for commissions for the realtors to sell it and the closing costs. So they're open to it. That's the non-distressed seller. Gotcha. The stress seller is different. There's a lot of those too. Those are the ones that are behind on their mortgage payments. It's the same situation, what I just described with the non-distress. The difference is they're usually a couple of months behind in mortgage payments. So they're even more motivated.
Makes sense. You mentioned, maybe I didn't catch that in your presentation, but I didn't know that you actually worked with realtors. So did you property off the MLS that you bought?
Oh, yeah. Yes.
That's fantastic.
A number of properties we definitely solicit are ones that are listed on the market. Yeah. So what I do is I do a search for properties that have an interest rate between 2 and 5%, that have between 80, LTV, loan to value ratios between 80 to 100%, meaning they have 20% equity or less. So I kind of do a cross on that. I take that data and then I will compare it to properties on the MLS. And then we'll pull out and see which one of these properties are on the MLS, and then we'll reach out to the listing agent and see if the owner is open to selling their house by having me take over their payments. And that kind of opens up a conversation. What do you mean? Are you going to assume the first thing they think is, oh, you're willing to assume their loan, but their loan's not assumable. And then we start having a conversation about how the subject to works.
So to educate them, and again, that's the biggest fear. I think people have that the bank calling the loan due. But I mean, I've for years of hearing people do this, and I'm sure it happens occasionally from time to time. Probably in a situation where the payment's not being made after it's committed to do the subject to buyers committing to do so. Then they don't. Then they find out. But banks are there to loan money and collect payments. If you're paying the payment, and the insurance is up to date, I don't see that being a huge concern. I mean, maybe I'm I don't know. Wait, Jeff, Christian, what are your thoughts on that? Like, I don't know.
I was doing these well before they were cool and guruized back in the day. We used them primarily for pre-foreclosures. And we didn't look at it. I never looked at subject to as a long-term thing. I looked at it as essentially a way to get on title, catch up the mortgage, basically get the attorney out of the mix because the attorney and, it's accelerated at 18% and then remodel it and then either refi it or sell it. And that's kind of what we did back in the day. My experience is the due on sale comes in, they always figured it out at some point with insurance. The insurance, when you start changing or adding people to it, they kick it around and start looking. I think every year now they do check the vesting around tax time for sure. So at some point they catch it, but I mean, I know of one that made it 15 years. Wasn't
Yeah.
mine, but I
Oh,
know
wow.
one that made it 15 years. I just think the bank didn't care. Hey, we're getting our money, and it was a subprime loan too. I think they were just happy to be able to say they had one performing left from 2007.
That's interesting.
Yeah.
Well, cool. Well, I know Peter Killar, one of the members of our group. I know he for a long time was really big into that, and I'm not sure if he still is or not. But that's
He's still
awesome.
got a few of them.
Does he? Okay.
So, I mean, he said something to me because he kind of figured this out. He actually went and we bought on eBay a Jeff Collar Mr. Pre-Foreclosure course on eBay. And then between the with the Mark Warda and then Larry Harbaugh, God rest his soul. Anybody's not aware, Larry Harbaugh, the guy from Tampa that was big on creative finance and land trust, he passed recently.
Oh, did he really? Oh,
The with a blend of those two, that was kind of the concept. But he said something to me. We were having lunch, and he, in the Peter accent, Jeff, it's a mortgage I don't have to qualify for.
Yeah.
Because at the time, him and I owned a mortgage company together. So it was, that's the biggest thing I look at for subject to. It's a mortgage you don't have to qualify for.
Correct.
yeah, makes sense.
Correct. That's that's a big advantage of using this creative method is that you can acquire more properties because you're not limited to the number of loans because you're not qualifying for these loans. So it's a great way to build up your portfolio. And as Jeff mentioned, one of the strategies is to do a fix and flip, which is a recent one that I did. I held it for about 80 days and I was going to fix and flip it, but I had a couple of other projects going on. I said, you know what? It's good value in here. Let me put it out to the market. So I ended up selling it. I actually, having my realtor license, I put it out there and I sold it to an end buyer, and it turned out great. I have another one that we're closing on next week, and we're going to be turning that into a co-living house where we're going to add bedrooms and so forth and keep it as a rental property. So two different extra strategies, and also too, like, I would agree with both you, Mike, and Jeff too. Two of the bigger ways of getting, the banks on the bank's radar, I should say, is the insurance, not titling the insurance properly. And I also see more so where you take ownership in an LLC, like Joe's Real Estate Investment Company. That's kind of a red flag if they
Yeah.
look at the deed and say,
Yeah.
oh, Joe's investment company owns Mike Lyon's house. Interesting.
Doesn't
Okay.
make any sense.
So,
Yeah.
I'm not, that sounds interesting. How does that work? So that's why the majority of the times I utilize a land trust. I don't call it a land trust. I generally will name the trust using the address of the property itself and
Yep.
maybe the last name of the seller. So if the seller's last name is Jones, I may call it the 123 Main Street Jones Trust or Jones Family Trust. So, or maybe it's called the 123 Main Street Revocable Trust.
And
Just
you
because,
too, with insurance, you would add them as additionally insured. So when it was submitted and they got insurance renewal, the name's still on there.
correct. So when they see it, I would name the trust. If it's in a trust, I'll name the trustee, for the trust as the primary insured. So it would be, Joe trustee as trustee for the 123 Main Street would be the primary insured. The mortgage would be the mortgagee. And then I named as the additional insured, Joe seller.
Gotcha. Makes sense.
And that kind of doesn't raise red flags on. So just my own my own prerogative is to use a trust versus an LLC. And people do use LLCs. It's just what you're comfortable with regarding that. I think trust is just there's just a lot more flexibility, and it's a private document versus LLCs are public, right? You go to Sunbiz or wherever you incorporate, you can see who the registered owners or the registered agent is versus land trusts are not recorded. They're private documents.
Gotcha. No, that makes sense. That makes total sense.
Yeah.
That's great. That's great.
Yeah.
Any tips for newbies trying to do, which you shared a lot already, but is there any tip for new guys trying to get in the business to do the subject twos that you'd want to share?
I mean, I really think it's a transaction that you really need to work with somebody, whether it's myself as experience or other people who've done it, because there are a lot of moving parts. So I think your first couple of deals, you really want to work with somebody who's done it. The second thing is you want to work with a title company that understands these transactions.
Sure.
Because it's a little bit different than your traditional, residential sale. There's a little bit more moving parts. And also too, a lot of people will use a transaction coordinator. There's companies out there, you pay a flat fee of $1,000, they'll act as your transaction coordinator.
Gotcha.
So I think, on that side of it, I think a newbie, I think really what they need to do is they need to go and look at those properties that are sitting on the market, that have been on the market 100, 130, 140 days in areas that they identify where they're saturated with a lot of listings.
Gotcha.
And look for purchases that were made you don't even need to use a data search service like I use PropStream. They could just go and look at the public records, in LIPA or whatever county records and see when the house was purchased. So really kind of look for houses purchased 2021, 2022. Those are prime ones because those are when the interest rates were phenomenal. And those are the houses that you want for sub 2 deals.
And you mentioned something too that I didn't catch before is that they don't have to necessarily, in some situations, they don't have to necessarily be in default. If they're in a situation where they just want to get out, and this is a way, I mean, they're not discounting it potentially as much as they would if they had to, really drop it and go. But they'll sell it at a discount. They're getting what they want and need to be out of the property and be done with it, and they can move on. So it's not just a default situation, which I was subject to default. You get them current, you take over payments, and then they're happy. And that's interesting.
Yeah. It doesn't have to be somebody who's, like you said, a distressed seller. They're motivated, right? The difference is the distressed seller is that seller who's a couple months behind on their mortgage payment. So they're a little bit more motivated. You can get a better deal. You may not have to give them any money for any equity that they may have in it versus that non-distressed seller, like you said, somebody who's not behind their payments, but their property's been on the market for 120, 150, 180 days and just want to move on.
Sure.
They may play a little bit more hardball where like, hey, you got to give me some money at closing, or I've got 20,000 of equity. Like, yeah, but that's going to disappear after 3% listing, 3% buyers, closing costs, so forth, so you got to maybe give them a little bit more equity either at the closing table or maybe build it in as a deferred payment to them for sure. So opportunities are out there on market. I mean, you can go on Zillow, if you're licensed and you have access to the MLS and the MLS, there's tons of them out there, especially in certain key markets in Lee, Collier, and Charlotte counties.
That's awesome. No, that's good information. That's great.
Yeah.
Well, Christian, man, we appreciate all the information you provided. It's a wealth of information. If anyone wanted to get a hold of you to do some partner up, how could they do?
They can hit me up at Christian at corerealestateproperties.com. That's my email. And they can also go to our webpage, which is corerealestateproperties.com, and they can, hit me up there. And happy to share any information with them and help them in any way I can regarding this type of transaction.
That's great. No, well, Christian, we sure appreciate you. Appreciate your time, and we'll post this, get it out there, and have individuals potentially reach out.
Thanks again for having me, guys. I really appreciate it. Happy Friday.
You too. Thank you.
All right. Take care.
You too.
This concludes this edition of REIA CAST. Be sure to subscribe to receive our next episode. You can also subscribe at our website, www.swflreia.com. See you at a meeting soon. Please let us know if you have a suggestion for a future episode.